Hey, psst. You want to know how to avoid taxes as a real estate investor?
Legally, of course.
Yeah.
So are there some secrets that real estate investors are holding back about tax breaks?
Yes.
And do we happen to know some of those secrets?
Also yes.
Watch this video so that you can learn some of the tax break secrets that we happen to know and capitalize off of our knowledge.
Why do you think the majority of millionaires out there have so much real estate in their holdings? Well, historically, real estate goes up, so you wait long enough, you'll make a profit, and you can rent the property out in the meantime.
But that's just one piece of the puzzle. When you find out about the tax breaks that you get that the IRS gives to real estate investors versus your own income, it's gonna open your eyes to a whole new world. In this video, we're gonna share with you some numbers, actual numbers from one of our small portfolios in Indy, and we're gonna break those down so that you can see what taxes did we pay as real estate professionals versus the taxes we would pay at a job, at the JOB.
So for this video, I actually went and pulled our 2021 tax return for this small portfolio so we could give you real numbers. So during 2021, we collected $120,010. So for the purpose of this video,
Sorry, the $10 is incredibly important.
I just want you to know these are all real numbers,
right.
But we're gonna use, for the sake of easier numbers, 120,000 throughout. And what we wanna do is we wanna compare that to if we were making $120,000 at a JOB, paying regular taxes the way we do when we're an employee. All right, so you know if you're making $120,000 at a job, like you're paying some buco taxes, right? Well, on that same $120,000 of income, we paid 0 taxes, and I mean 0. And it was legal and it was ethical, and we wanna show you how you can do the same.
Okay, so how was all of that actually possible? Break it down for us.
The IRS treats rental property similar to a business. So there's certain expenses that we get to deduct because there's certain expenses required to run that business. That's very similar to real estate. There's certain expenses that we incur as a result of running our real estate investing business. Plus, there's actually even more expenses that we don't even have to pay out of pocket that we get to deduct. I'll explain more a little bit later in this video about that part.
As homeowners, we get to write off our property taxes up to a certain point and our mortgage interest, but there's really not much else. All of the other expenses we have, like homeowners insurance, utilities, maintenance, repairs, lawn mowing, pest control, we have to pay for those things with after-tax dollars. So what does that mean? It means we get paid from our job after having all our taxes deducted. Then we pay for them and we get no tax credit for that.
Boo!
So let's say you're an investor living in California. My God, taxes are high there.
So if you have a salary of $120,000, the same amount that we bring in from this small portfolio, you're gonna pay about $37,000 in taxes. And let's break that down. That's around $9,000 from Social Security and Medicare. Then you're gonna pay another $20,000 in federal taxes and almost $8,000 in state and local taxes. Ouch!
Let's have some fun. What is one of the craziest things that we've been able to write off that most people wouldn't even consider?
So one of the things that's cool when you're investing in real estate, if you strategically invest in a place where you know you're gonna want to go anyway. Now granted, of course the market has to make sense. That's first and foremost. For example, we had an opportunity earlier this year to go to the Indianapolis 500. Well, guess what? We have properties in Indy, which means we are legally allowed to write off our trip because while we were there, we were looking at our rental property. I mean, we were literally riding bikes around the area and doing videos in front of them.
We get to write off the bike rentals. We get to write off the flights. What else do we get to write off?
Our hotel, we had to stay somewhere.
We totally had to stay somewhere. That's awesome. Okay, that's fun. What have you been able to write off, or what do you wish you could figure out? Can I write this off? What questions do you have? Comment below so that we can chime in for you. Okay, so you mentioned in 2021, for this small portfolio that we have in Indy, we had $120,000 of rental income coming from those properties. So what was the overall net taxable income after we did all those write-offs?
Well, I was looking at our tax return before recording this, and it literally was negative $1,200, which means we actually incurred a paper loss of $1,200, which meant we didn't pay any taxes on that $120,000 of income. What job do you know that you can go and have a $120,000 salary and pay no taxes? Not happening.
Okay, so let's break this down. We had income of $120,000. Our interest expense was around $42,000. Our property taxes were about $13,000, and we were able to deduct both of those. Now, as a homeowner, you have the opportunity to use those as part of an itemized deduction. So let's not even count that as a benefit to compare for now. But what else were we allowed to deduct that you can't as a regular homeowner?
A lot. When we added it all up, it was about $37,000 of deductions that we can't write off as homeowners on our personal residence. For example, utilities, maintenance, property management, insurance, lawn service, snow removal. We wouldn't be able to offset our $120,000 salary with any of those. That sucks.
But wait, there's more.
The most oddball expense that we get as real estate investors, that of course we love, the expense is called depreciation. Now, I say expense because we didn't pay anything. That was nothing out of pocket. So the IRS allows us to take the basis of the property, which simply put is what we paid for the property plus any capital improvements. So for example, rehab. So you add those amounts together and the IRS allows us to take a piece of that every year and deduct it as if we paid it out of pocket. But we didn't. And that ends up lowering our taxable income.
Brilliant. So how did we bring in $120,000 of rental income but have a negative $1,200 loss? Income $120,000, less interest and taxes of $54,000, then less other operating expenses of $37,200, less depreciation of $30,000. The net income ended up being minus $1,200.
So how much tax do you have to pay when you have a loss?
0.
We love real estate. Real estate really is the single best way for you to build wealth, to build financial freedom. And if you're watching any of the videos on our channel and you do real estate the way that we teach it, you're also gonna learn how to build time freedom and location freedom as well.
And since we're on the topic about money and how we save it in taxes, you might be interested in watching this other video right here about how we almost went bankrupt in real estate. Almost.
Oof, it's a doozy, but we learned a ton. Thanks for watching,
And we'll see you next week.